If you don't know how your neurons are working in your physical brain, how should you know why you don't do what you have to do?
What type of common problems have you encountered in coaching or some of the people?
It's always the ego, it's always overthinking. Scientific has proven that there is no multiple tasking. 6% is the holy number. If you lose 6%, you need 6% to come back to break even. If you lose 7%, it's increasing 7.1 and on and on and on. The more information you have, the more overwhelmed you are and you cannot focus.
Hi everybody, welcome to another edition of the Trading Battle. Today we interview Markus Gabel from Dowhow Trading. He's got a very interesting approach to trading, which is both logical and emotional and mathematical. And we're going to get deep into a lot of things that he does, which I'm sure a lot of you are going to find interesting, some perhaps even controversial. Welcome to the show, Markus. Nice to have you here.
I'm really honored and pleased that I can be here. Thanks for having me here.
It's wonderful to have you. So first of all, from the word Dowhow Trading, basically your primary instrument of choice is stocks. Is it what you trade, or is that just sort of a general name, but you actually trade everything under the sun? What instruments are you?
Basically, I love to trade the Forex market, but basically also indices, commodities. I don't trade single stocks.
Okay.
Because for me, too many stocks. But for me, which product I make money in the market, I don't care. Yeah. So, but mostly in Forex, indices, commodities.
Are your trades, are you a long-term holder, short-term holder? Like what is your general sweet spot for your trading approach? How long do you hold a trade in any of your positions?
I have two working styles. Working style number one is in higher time frames between 4-hourly chart and daily chart. And but I prefer actually my working style number two. That's day trading, 2-minute charts and 5-minute charts.
2-minute charts and 5-minute.
2-minute and 5-minute charts, yeah. But also, I teach my students if you don't have time to trade to make day trading, you can also use higher time frames because it doesn't matter. It's just a question of time.
Why do you prefer day trading?
Because basically, I don't do it for myself. I just do it for my students to show them it is possible. Because basically, for myself, I don't need day trading. Yeah, because I prefer higher time frames. You can make the same money. It just needs a little bit more time. But basically, I show my students how to make money with day trading. Clear structure, discipline, but it's not really my favorite.
I see. So you're much more preferable and comfortable on a 4-hour to the daily chart. So on that time frame, what's the average hold size of your position? Like, is it a matter of a couple of days? Is it a matter of weeks? What do you generally, when you're in position, how long do you usually hold it?
From a couple of days until a couple of weeks. It depends because I'm a trend follower like the turtle traders, and the market shows how long the position is running. So it's a trend following system, movement and trend following. And in this working style in higher time frames, we don't work with a risk reward ratio. We just have a calculation of the money management and then just let it go. Just cut the loss and let the profits run.
Can you explain that? What is the calculation of a money management, like a longer time frame? What does that mean?
The point is, there is a big mistake in the whole universe, because people think they can use about money management or risk management, like people say 1% or 2% or 3%. But this is one of the stupidest ideas ever, because the first part you need to know how big is your drawdown phase. You cannot know how much risk you have in your trade, because first of all, you need to know how many trades can go to the loss in a row. Before you don't know that number, you don't know how much you can risk. Because 6% is the holy number. Because if you lose 6%, you need 6% to come back to break even. If you lose 7%, it's increasing 7.1 and on and on and on.
Is that the math? I didn't realize. So the math works. 6 is the sort of the Maginot line between on break even, and why is it that at 7% you need to make 7.1%?
It's pure logic. It's math. You need the more because the account is going down. So let's make a simple number.
93 times 7 is not quite 99. versus 94 times 6, I guess, is closer to 100. That's what it is.
If you lose 10%, you need 11. If you lose 50%, you need 100% to come back to break even.
Right. So I guess basically at 7, the proportionality goes to less than a break even, and that's it. Okay, that's a really, really interesting insight. I never heard this before, and it's probably a great.
Yeah, and this is the human part, Boris, when it comes to gambling. Because if people have a small account like 500 or 1,000 or 5,000, and they start to lose money and they lose 20%, then they see, oh my gosh, now I have to risk more to come back to to break even. And this is the point where people start to gamble. And that's a human part. That's why I tell all the time, guys, 6% is the holy number. So you cannot risk 1% by trade if your trading approach or if your product has a drawdown phase of 6 or 7 or 8 trades in a row. You cannot, because you start gambling with this.
So basically, your argument is that after 6%, almost everybody is going to go on tilt. Everybody is gonna eventually lose control, which
Exactly.
pretty
Yeah, it's the
and
human part.
just your human impulse. And at that point, when the math starts to really work against you, it's almost impossible for you to fight it. So what you do is you try to gamble your way out of it. Of course, that's it.
Basically, you have no choice, because in that moment you realize, okay, if I lower my risk, oh my gosh, I need so much more time to come back. Yeah. And people want to get rich tomorrow.
Right.
Yeah. But that's stupid. It's not working.
I don't want to spend the next 2 years making back what I just lost, which is how everybody.
That's the point why I say to my students, please take a low risk, 0.2%, 0.3%, and let time play for you. As a private trader, time is not basically your friend, but it's also not your enemy. But you can make time to your enemy if you try to pull the grass. But the grass doesn't grow faster if you pull it. Yeah. So you need calculation of your money management and let time play for us. But then you have to understand you cannot become rich tomorrow.
Right. If you're spending 20 basis points risk on a trade, obviously, you have 5 or 6 in a row and you're only like at 1.5% down. But doesn't that, like, let's say with your clients, if they have even a $10,000 account, they're basically risking $20 on 0.2, right? Doesn't that kind of like deflate them because, it's not a meaningful enough trade for them? So they feel like, I'm not making any progress. How do you fight that feeling?
That's one of the points. I call it the inevitable things you have to accept in trading. I know it's $20, but do you want to learn how to trade or do you want to gamble? So, okay, to be honest, what do you want with $10,000? What do you want?
They want to double it.
Yeah, exactly. So what do you have to double it? You have to hire the risk. You have to increase the risk. But the risk, if you increase the risk, it's going to the lower side also. So, and then suddenly if you just have 1, 2, or 3 losses in a row, then you get in trouble and then you start gambling. Yeah. So, and this is the big problem. People don't want to accept the inevitable things in trading.
Yeah, I think like what you have to explain to people is if you have a $10,000 account, you want to double it. You're basically making an implied bet that you're going to have 5 consecutive winners in a row. And if you don't have those 5 consecutive winners in a row, it's going to blow the whole account. So like when you explain to them that what you need to do in order to double it is so incredibly difficult and so incredibly lucky, you have 0 chance, you're never going to do it. But they always think that that's possible.
Why 90% of all traders lose? Why? Why is all this exactly that? This is
size is true. But the other thing you said to me I thought was interesting was you said you don't really think about risk-reward ratios. Is that because you're on a trend trade, small size, 0.2 basis, it starts working for you. Since you don't really have a 2-to-1 risk-reward ratio, what you're doing is you're just trying to run that trade to its potential, whether maybe it's 1R, 2R, 3R, 5R risk. Is that how you sort of look at it? That you never know how much profit there is in a trade when the trend starts, you're just kind of trailing behind it. What's your methodology of how you capture your profits, but at the same time let them run? What do you do?
Really, let them run. The market decides. This is working style number one, pure trend following. In working style number two, that's day trading, we have a clear risk reward ratio of 1:1 because we have a probability in trend following of 67%. It's enough to work with risk reward ratio 1:1. So, but in trend following in higher time frames, we don't work with risk reward ratio with any R, because how should I know how far the trend will go? Why should I cut my profits? I just let it go. When the market is running, I trail the stop loss in the profit and just let it go. The market decides how much money I get with one single trade. I don't care about the single trade. Yeah, just let it go. You will never know how far the trend is going.
So what I was gonna say is, can you walk us through, let's say, a successful trend trade and maybe not a successful trade, and just show us what was the sequence of events that you did in order to actualize the profit?
In the last weeks, we had three of them. Three perfect example. That was German index, euro dollar, and gold. Wonderful trends in 6 hourly chart, 12 hourly charts, daily charts. We had almost 8, 9 trend arms. It was amazing, really amazing. It starts 6 months before, and my students run the trade. It's really, really cool.
So, but like, they're in the trade. I guess my point is, just for argument's sake, let's say the trade is 10% in your favor. What do you do at that point? Do you move the stop to +5? Do you keep it stationary? When do you take a profit? I guess I'm interested in the details. What happens in how you guys manage these longer term, style two trades that you talk?
We don't take any profits. We just trail the stop loss. So we have a trend, and we trail the stop loss. If you have a new high, you trail the stop loss to the next correction point. We don't get any profits. The market stops out at any time.
Okay, what's the next correction point in your methodology in terms of price action? What do you determine the next correction?
It depends of the time frame, of course, in which time frame you trade, but the trend. Listen, the point is, trend drawing is a mathematical point, because everything starts in the order book, as you know by yourself. It's price and it's a supply demand, it's correction, movement and correction. So, and finally it's a trend. And it depends which time frame you trade, then you have to draw the trend. But there is not a big trend. There is not a medium trend. There is not a small trend, because the beginning of trading is mathematic. And the words big or medium or small are things you must interpret. It's individual thing. What is big? What is small? What is medium? It's nothing you can put into a mathematic, but everything starts in the order book. So the order book gives you the highs and the lows depending of the time frame you use. So when the correction coming down, and we work with Heikin-Ashi, for example, when the correction comes down and the point and the price moves and going higher than the last high point, then we have a correction point, and then we trail the stop loss.
Okay, so that's what I was trying to get at. So you use Heikin-Ashis, and you use sort of highs and lows and Heikin-Ashis as your reference points. And those are your natural trail points, which is very good. It's interesting because, so first of all, Heikin-Ashi, of course, great. The thing about Heikin-Ashi is they're really beautiful on the chart because it's super clean and clear. But of course, they're fake. One of the things that I discovered, I guess, the hard way when I first was experimenting with them, because you can't use them on an intraday chart because they repaint themselves. Like, in other words, that's not really what the price was. The Heikin-Ashi is the average of the prices, and therefore, it's not the actual trade price that happened, like actual candles are. So on the dailies where you have lots more time, you could actually, trail them intelligently. But on intraday, you're saying, oh, I could have exited here, but that was never a price. That's the average price. It wasn't the actual price where you could have gotten out.
Oh, we use Heikin-Ashi in day trading also. Only Heikin-Ashi, because I don't care about the single price. I'm a trend follower. I just want to see the trend. So, and the trend, I see it in Heikin-Ashi very beautiful, and I don't have to interpret. Because if you work with normal candles, then you have to interpret all the time. Is this a bullish engulfing? Is this a bearish engulfing? Is this? No, in Equinashi, you don't have this. You have a trend candle, you have a balance candle, done.
The way you trail your stop on that Kakadashi is that you have an actual price that you just put a trail price on that is derived from the Heikin-Ashi chart, and that's the actual price. And that that stop hits, or if it doesn't hit, then you keep going, keep going.
Even the candle looks different. I can see in my scala, I see the real price. Yeah, the real price always the same. The candle looks like different, but I don't care about the single price. I see the trend. I want to see when is the correction done, and then I go with the trend. I don't care about the single price.
Do you trade? Speaking of trend, is it easier for you to trade the long side or the short side, or you're completely agnostic? You just
I don't care.
don't
I
care.
don't care.
You're not.
Okay, we trade long and short, long and short. It's just mathematic. If you understand the mathematic, if you have a favorite of long, it's a human part. But trading is mathematic. There is not. I love long. I love short.
It's very true that trading is mathematic. The markets are are math, but trading is a very personal thing. And like people have all sorts of personality quirks that either, I'm sure you must have noticed this, they're either amplified or truly serve as an obstacle in trading. Like, depending on what, stupid things. Like, for example, I am much more comfortable. I'm a big momentum trader. I love high speed, fast trades. I love NASDAQ. I have a horrible time trading gold. I use the same approach. And I'm just, personality wise, I'm always, it's not that I don't trade gold. I still trade gold possibly, but much worse than I do NASDAQ. A lot of it has nothing to do with the strategy, everything to do with my personality and just my attitude towards the instrument. There's a personality aspect of it. I wonder when having coached, you've coached more than I think 1,000 traders in your life, right? What type of commonalities and what type of, common problems have you encountered in coaching or some of the people?
Ego. It's always the ego. It's always overthinking and not willing to undergo what it needs to be a trader. You need to understand you are on the right edge of the chart. You don't have any influence to the price. You have to work with probabilities. You have to stick to the rules. Even you have a loss, go on, go on, go on, go on. But this is the problem. The human mind is not working in this way. And for a trader, you have to switch your way of thinking. This is why I teach my students in neuroscience. I don't talk about psychology, this stupid thing of mindset. It's all stupid things. If you don't know how your neurons are working in your physical brain, how should you know why you don't do what you have to do? Yeah, because as you know, you have the rules, and every morning you are willing to stick to your rules, and in the evening, oh bullshit, I failed today again. So the question is, why, in God's sake, I cannot stick to the rules? And this has nothing to do with mindset or psychology. That's stupid things. You need to know why you do what you do. And this is a kind of your personal connections of your neurons in your physical brain. And as long as you don't know how you work in your brain, you cannot change something. And no one is teaching this. My teachers taught me this, and I give it to the next generation. But this is not sexy. It's not sexy. That's made for marketing. But it's the only way to become successful in trading if you're willing to change, you be willing to change your way of thinking.
So what are some of the aspects of neuroscience that you've been taught that most people don't know and don't understand? Like why, for example, do we start the day saying, I'm going to do this, and end the day saying, no, I didn't follow my plan again? Why does that happen?
It's a very simple thing because we have our 5 body senses, and in trading, you use your eyes and maybe your ears. Yeah, so that's all. Your conscious thinking, the conscious thinking is take place in your prefrontal cortex. This is beyond your forehead. And conscious thinking is based on 5 magical questions: what to do, how, when, where, and why. This is what you ask in every second, in your subconsciousness, you will always think and question these 5 questions. What should I do? How, when, where, and why? So the point is, if you cannot answer one of those questions in a logical way, you are forced about your neural connections into the limbic system, and the limbic system is your place of emotions, which means you are forced to act in an emotional way, and then the next one to the basal ganglia where your routines are placed, which means you do what you ever did. And this is emotional trading. This is emotional way. So that's the point why you need rules. Because if you don't know what to do, how, when, where, and why, you must act in an emotional way. And that's the neuroscience behind.
So do you actually have your students spell out all those 5 rules, maybe in front of them? And when they're looking at the screen and they're acting, you have them maybe refer back to this list and say, why am I doing this? What am I doing right now? How am I doing it? In order to take themselves out of that, it's almost like an emotional hostage taking. The market takes you. The market takes you hostage, which I've been in that state virtually every day of my life, one way or the other. And it's kind of remove yourself and therefore have the presence of mind to not to go gamblers. Is that the process?
Yeah, it's a process, and all my students must print out everything. So we have, for example, we have 5 blocks. The first block are the 4 magic rules of Dowhow Trading, and also trend drawing, always 4 principles. Why we use only 4 principles? Why we have 4 rules? Because your prefrontal cortex cannot work on more than 4 thoughts at the same time. So if you have more, then you get overwhelmed and act emotionally immediately. So every student must print out and laminate all the rules and have it in front of your desk. And you have a waterproof and pen in your hand. And before you don't have 4 checks on your paper, there is no trade. There is no trade. So this goes for money management. This goes for trade management, that you always can answer the 5 questions. Always. Whenever you open the chart, you always have answer to the 5 questions.
Is it also the reason why simplest strategies tend to work best in the market? Because you said, you can't hold more than 4 concepts at the same time. I find that if you explain a strategy that's very complicated to people, it almost never resonates. But the simplest, the most obvious, easiest strategies that I teach tend to have a lot more understanding and a lot more success amongst people. Is it because the human mind simply tries to reduce everything to its simplest core? That's why, trend is kind of a very simple, clean concept to understand.
It's indeed neuroscience again, because it's not about the mindset, it's about how your prefrontal cortex is working. Because it's scientifically proven, subconscious thinking cannot work more than 4 thoughts at the same time. Now you have a problem. You have 5 body senses. So you have 4 thoughts. At 65 imprints or 65 thoughts per second come into your prefrontal cortex. So there is an overwhelming state all day long. So now look at the chart. There's information. There's information. There's some, this is bullying a panda. This is this indicator. Bam! This is why it's not working.
That also explains, by the way, makes perfect sense to me now. Even if you have a successful strategy, but you're distracted, like you said, there's 65 thoughts. There's also 65 distractions. There is an email. There's a tweet. Your wife comes in. Your pet starts to scratch you. Your alarm goes off because you have to go pick up your child from school or whatever it is. Any one of those, especially if you're day trading, where it's a matter of 1 minute, it's there, next minute, it's not. We've all in other words, if you miss the setup, especially on a short term, like a 2-minute time frame, and you're entering late, is by very definition entering wrong, because your risk rewards and all of your probabilities get completely messed up. You can even get lucky on that trade, but the point is that the price, if you're coming in at a price 5 points higher than you should have been, it's just luck that you're going to make profit on it, because the whole idea is constructed upon a very clean, clear probability set. So I find that that's another aspect of it is that you talk about lots of thoughts coming into our head. It's just everything in modern life that's why if you're day trading, I always say to people, it's much better to take 1 hour and really focus on what you want to do instead of trying to kind of casually do it throughout the day, because that casual, um, that's what kills you. It's the casual trade that you put on without thinking that goes wrong. Now you casually try to get back out of it, and you double up the size, and that's the cycle of despair that happens all the time.
Absolutely. And this is why we don't work with any indicators or any news, just the naked chart in me. That's all. I have to draw the trend. I follow the rules. The full rules are in front of me. I just check it up. And the point is, the moment you can, it's an interesting part of our brain, because if you need to remember the rules, it's the moment you lose yourself in your thoughts. But if you have it in front of you and you can read it, you don't have to remember. And that's a relieving point for your prefrontal cortex. That's why I force all my students, print it out, have it in front of you, take your pen, check, check, check. Then you don't need to remember, because one remembering and blocking things is for your prefrontal cortex the two most intensive points you need energy, sugar and oxygen. You need for that to remember things, and do it by yourself. Try to figure out, what did you eat yesterday? So the moment you try to figure out, to think about it, after 2 seconds or 3 seconds, you think something different. And after 5 seconds, what I wanted to look for? So what was it? Yeah, this is why we lose ourselves in the way of our thinking. That's why you have it in front of you and then you don't need to remember. That's also the point of the easy things. The more information you have, the more overwhelmed you are, and you cannot focus. On a scientific basis, only the process of your brain is 20 seconds. You can be focused in a one row for 20 seconds. After 20 seconds, it's done. You get distracted by anything else, even your own thoughts. 20 seconds. Even every stupid goldfish has a longer term to focus, 25 seconds, than every human being, believe me.
I think that the focus of a goldfish is actually longer than the focus of a human being. But it sounds like not only do you try to de-risk the student by making them trade smaller, but you also try to de-stress them. And that's an interesting point, because this is where ego comes. Ego comes in so many different parts in our life. Obviously, I know I'm right. I know the market is wrong. I'm going to go double the size because I'm sure this time is right. I'm going to fight the market until I lose all my money, or until the market gives up. Those are the common things of ego. But I think a much more insidious and very, very common aspect of ego is that we think we can absorb a lot more stress than we do, like mentally. What I mean by that is I can work on this work document and talk to my partner and trade at the same time and, do something else. Like, in other words, I am so, smart, and, my system is so good. I can do a million, like that very common assumption, which we don't even think of as ego, is actually very, very toxic for us. Like, because we don't, like you said, we really don't appreciate how little distraction and stress we can absorb as human beings. We think we can absorb a lot more than we can, because I can handle it all. I can multitask it all, and it's actually very true, because the moment I come off just the screen, the instrument, the thing, and I start trying to do a million different things just because I know I can do it, is the moment inevitably the losses start to happen. Is that true? Would you agree with that?
Absolutely, absolutely. It's this is why we talk about neuroscience, because people have a complete wrong understanding. And by the way, the scientific has proven that there is no multiple tasking. It's not possible. Yeah, what you do is like to jump on your subconscious. You jump from one task to the next, but you is there from your brain. It's impossible to have a multiple task. It is not possible. Yeah. You jump just from one task to the next. You jump, 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 jump. And this is why you're so exhausted after 1 hour or after 20 minutes. You're completely exhausted because you lost so many energy to use this. It's like, yes, you're just jumping around, but there's no multiple tasking.
Yeah. But unfortunately, modern life is uh, predicated on the idea that you should be multitasking a lot, or that you have so many obligations all over the place. Is it one of the things you sort of teach your students that, okay, if you're going to do this, trading, you set aside a time, you set aside a place, and you're going to do this, this particular time, and then nothing else. If you want to be successful, is that a lesson you teach them?
I also teach them, when you open your chart, please make sure there is no phone, there is no dog, there is no cat, there is no wife, there is nothing around, just you and the chart. And also, when you trade in higher time frames, I say, before you push the button, stand up, go around, just to the kitchen, go back, check it again. And if you say, everything is right, then push the button. Very, very important.
Circuit breaker. You create a circuit breaker,
Yeah. You come back and then you check, damn it, I missed this. You see, and if everything is right, there is a interesting point. This stress level is caused by two chemical reactions in your brain, in your prefrontal cortex. It's dopamine and it's noradrenaline.
Yes.
Adrenaline is for your body, noradrenaline is for your brain. So, and stress means you have too much noradrenaline, which it's capture you into attention too much. And if you have too much of noradrenaline, you poison yourself. And at the end, if you have too much of that, you get sick. And at the end, it's depression, burnout, and something like this. So you need this complete fine mix between dopamine and noradrenaline, because if you have too much, you really, literally poison yourself. And trading is made for this bullshit, because you are overwhelmed all the time. That's why we teach the students, take it easy. Meditation. I try to teach my students to make meditation. I do meditation every day. My teacher taught me to meditate every day, because also you have an increasing connection of your neurons 40% more if you do meditation. Yeah. Everything is based on scientific. And this is very important if you want to become a successful trader. And always come down. Easy as possible. Even the money management. We don't talk about 1%, 2%. It's a deep misunderstanding. What's your personal penguin factor? Because we talked about food in Thailand and what breakfast are good. So $50 for you and me. It means, yeah, it could be a lot or not.
It
But
means basically an average dinner for us,
yeah, if I go with my teachers to a dinner, they give a tip of $50. Yeah. But if I'm in my office in Bangkok in Thailand and I give to someone I give a tip of €2, $2. Believe me, they start to cry. Literally start to cry. If I give the taxi guy, if I give him $5, it drive me to the moon if I want. It's so different. So it's really crucial. What is your personal penguin factor? The one doesn't react if you lose $100. The next started to cry if you lose $20. So what's your personal penguin factor? When do you start to act emotionally? When you are not longer able to stick to the rules. It's also very important about your money management.
So really, really interesting point is, what is the absolute money value that starts to tilt you? Like you said, if I'm losing 20, 30, 40, $100, I don't even think about it. But you're losing 1,000, 2,000, that starts to really hurt. You're losing 10,000, then you're really, really. So what's super interesting is, at what point do you really start to care? And that's what you want to avoid as much as possible, because once you're starting to hit those, because you're going to hit those pain points, regardless, whatever you do, the market is going to make you hit those pain points. So you need to know what pain points you can absorb monetarily and still stay in the zone.
I learned it on a hard way. I learned it on a hard way. I was with my teacher in Frankfurt in one of his offices in a skyscraper. And I always tend to use $20 for my risk management. And then he asked me, is your penguin factor? And I said, yeah, yeah, yeah. I said, okay, take your pocket, take 20 euros, go down to the street and give it to the next people is crossing your way. And I said, what? What should I do? Yeah, $20, give me your pocket. He gave $20 of my pocket, go down to the street and give it to someone else. Okay, I did it. I went down, and believe me, it was so embarrassing. In Frankfurt, the middle of Frankfurt, I go down, I stopped an old lady and gave her the $20. She looked at me and said, what do you want from me? What do you want from me? I said, no, no, I want nothing from you. Really, take the $20. It's just an experiment. Really? I don't give you something for $20. No, I just give it and take it. So it was so embarrassing. So I went up to my teacher again and said, "Yeah, I did it." And then he said, "Okay, how do you feel?" Yeah, so it was a little bit embarrassing, but it's okay. And then he came up with the experiment and said, "Okay, next $20." I said, "Why?" "Take it. $20, go down and give it again." I said, "Why?" "Do it." I knew if I didn't do it, then he would stop the coaching with me. So I had a really bad feeling. So I took the next $20, went down again, and stupidly, really, I cannot believe it. Went out, and a young lady crossed my street, and I gave her the $20, and she said, "Are you crazy? It's not enough." I I thought, oh my gosh, no, I don't want something from you, please. It's just an experiment. Take the $20 and please go away. So it was so embarrassing. And I went up and he asked me again, how do you feel now? And I said, I feel it was too much. I don't know why. And then he said, do you know why we made this experience? Because how do you know that the next trade will be a winner? The next trade could be a loser also, and the next one also, and the next one also. So, which is your penguin factor? When do you start act emotionally? And this is your penguin factor. And at the end, I realized, okay, based on my account, that time it was just $5, €5 at that time. And then I realized, okay, now I can lose 4, 5 losses in a row or trades in a row, and then I'm at $20. That's the way how I learned to figure out my penguin factor.
That's super fascinating. It's really, thank you for sharing that with us. It's very, very interesting. It makes a lot of sense. Yes, it makes enormous amount of sense. But how do you, I want to go back to the original question of the natural tension of greed versus the proper risk approach with your students, because I'm sure you teach your students, 20 basis points, small amounts of money, and that does work, but it's so boring for people. Like, again, it goes back to the idea of like, oh, I only made $30 today. I could have made 300 if every trade was working today. The other thing is, don't you always find this very, very true? Whenever you trade small, every trade hits. Then you go, oh, I'm going to get large. The moment you get large, every trade misses, right? It's the Murphy's rule of trading. How What do you teach your students? Because I'm sure this comes up over and over again. I know I've had this a million times in my own life. How do you combat, that, oh, I have a little bit of success, now I can increase my size, instead of staying steady and, growing it slowly.
Now I work with really dramatic situations because every of my students have to buy a cactus, and every time they stick to the rules, they have to grab the cactus and have to make a picture from me when the blood is running. So I have also 2 cactus here in my office also, yeah, a lot of blood. Yeah, now the point is, don't forget, people that come to me lost almost everything, yeah? I'm not the guy who talk to the crowd of traders, so because I'm very specific and people, they come to me, they lost almost everything, so they know how it really works to lose money. And in my teaching, they are in a kind of a circumstances are like, that's why I call it Dowhow family. So you know what to do. Of course, you can, if you want, you can make your experiments, but you always come back to me that I'm right. Yeah. And what I say, what I try to say, as you know, as a teacher, you cannot carry the guys. You just can, this is the way. That door is open. Please go it. Yeah. This is why I tend to say, you cannot teach yourself in trading. It is impossible. You cannot teach yourself. You cannot enlighten yourself. Only a teacher can enlighten you, because a teacher is in front of you. He's already on this way. And a good teacher is turning around and enlighten your way, because you're looking in front, you look into the darkness because you see nothing in front of you, but the teacher is on this way already. And he's turning around and enlighten your way and shows you, look, this is the way. Come, come, come. Yeah. And this is what I teach, and I try to work with willpower. What is your real why in trading? What is your real why in trading? It's not money. Yes, we come to trading about money, but my teacher said we come about money to trading, but we stay about the insights. Come about money, but we stay. So, what is your real why in trading? It's not money, because if it were money, it would be way easier. But at the end, it's not money, because you lose money. You cannot come about money if you lose money. It's not the real why. So what's a real why? And I compare it with love. I compare it the real why with love. Love of parents to their kids. If you're a real dad, if you're a real mom, you would literally give your life for your kids, right? You would do everything for your kids because you love them. And this is the real why. And only if you have this real why, you have the willpower to stick to the rules and to avoid greed and accept that the way to trading success goes steadily but slowly. And then you accept it. If you remember the real why do you want to do?
Very, very interesting. Very interesting. Thank you for sharing that with us. Our time is short. I just want to have a couple of last questions. Been really, really fascinating with us. First of all, please let us know where people can find you if they're interested in your thoughts. Anything that you've written, anything that you'd like to share with our audience. We'll put the information into comments so they can get access to you.
Just my homepage, dowhow-trading.com. There you'll find anything. You can send me an email. We can call.
Do you run seminars in Thailand or in Europe or is
Yeah,
there?
yeah. We have online courses. We have an online logic course. We have a community. We have trading every day. We have seminars in Bangkok, in Germany,
Mm,
uh, also. But there's one very important point I need to say. I don't need any people that are looking for the Holy Grail. I don't need people that are looking for the success tomorrow. I want students, they are willing to go on a journey with me, to make the world to a better place. Such people I work, because I personally, I work with karmic principles. My teachers taught me karma. They work with karmic principles. I do the same. And I look for people that are really willing to change something, not the holy grail seekers. So don't stay away. If you want to get rich tomorrow, then go to wherever you want. But if you're really interested to learn trading
yeah.
and to have a real dream to make trading for living during the next 2 years, then you're welcome to join my club. Otherwise, go away.
Okay. Fair enough. Last question we ask a lot of our guests is top book or trading or top 2 or 3 trading books that you've read, anything that you think is really had a great impact on you. It doesn't necessarily have to be about trading, but like something that really did help you understand and make trading a little bit better. Anything that comes to mind?
Can I be honest?
Yeah, sure.
The own book you write by yourself.
I was gonna say the guests to say, there are on the other books, there are no books that have helped me. That's absolutely
The
true.
point is, there are so many books outside there. It's a good thing to read the books about the turtle traders, but to be honest, the books you can read is made by an author who just share his experience, and there is no copy paste. I have a lot of books here, from my mentor, from my teachers, but finally, the author of those books is my friend and my teacher, and I ask him many times why you didn't write this in your books, and he always answer the same question: because you would not think about it if I write it in the book.
Right. Yeah.
So the only thing, stop reading books. Really, stop reading any books. Take a teacher and go the journey with your teacher. Then you don't need any books.
Yeah. Very interesting. Okay, well, Markus, it's been an absolute pleasure. I want to thank you so much for being our guest. You have really opened up our eyes to a whole bunch of interesting stuff about trading, about human psychology. I want to thank you again. Of course, all the information about Markus you're going to find in the comments. Everybody, please be sure to come join us for any additional trading battle. Hit the subscribe button so we can provide you with the best content there is for the trading battle. I'm Boris Schlossberg. I'll see you guys in the markets. Over and out.